Hi there, Andrew Crute here. We just wanted to quickly go over what the difference is between the spot price of precious metals and the buy price and sell price of precious metals. This can be very confusing to a lot of people, especially if you haven't done any purchasing or acquisition or selling of precious metals before in the marketplace. And some of the businesses we're involved with and stuff relate to precious metals, so a lot of the questions people have is, well, why do I have to pay so much compared to the spot price? So I'm just going to go through in as simple a terms as I can. I'm not a financial planner, I'm not a precious metals expert, but in terms of layman's terms, I'm just going to break it down. Obviously, it's all of our own responsibilities to be educating ourselves, and the information I've put together here has come from some reliable websites that relate to precious metal purchasing, and also some books, especially stuff done by Mike Maloney and some real experts and real people that are passionate about precious metals and investing in particularly gold and silver. So what we're going to look at, like I said, is what the spot price is, why that's different to what you might be able to buy precious metals for and sell them for, and how this is going to impact on what you do. Okay, so let's get to it. Okay, so what is the spot price? So we'll define that first. Okay, so that can be defined as you see on the screen, the current price at which a particular security, in this case gold and silver or any precious metal, can be bought or sold at a specified time and place. A securities, or in this case a commodity of being precious metals, gold and silver, the spot price is regarded as the explicit value of the security at any given time in the marketplace. Now what you need to think about is, okay, so share prices, that's a spot price. When you see on the news at night what the price of gold is, that's the spot price. So that's the price that the market is saying that commodity or that item is worth at that particular time. Now obviously free markets go up and down, up and down, up and down like a yo-yo, and as some of you may be well aware, the precious metals market is highly susceptible to forces that want to manipulate it, and I'm not going to get into that now, but if you think back about back to April this year it was, gold was hovering around $1,900 in that ballpark, upwards of that earlier this year, and then all of a sudden in a couple of days it dropped about $400 or $500 an ounce, and there's a lot of information out there that kind of points towards some severe manipulation of that market. But as purchasers of precious metals, this is a good thing because we're not going to be selling, but now is a great time to buy precious metals, especially gold if you can. We'll get into that a bit more in the next next page or so, but also silver as well. Okay, so we've got buy price versus sell price versus the spot price. Okay, so the spot price we've already defined, and the other two prices we have here, buy price and sell price, they're going to be very different depending on a large number of factors. Okay, so yes, there is a difference. Very, very rarely, if ever, you would be able to buy or sell a precious metal at the actual spot price. There's a few different reasons for that, which we'll get into, but just be aware that the spot price is your, I guess, barometer or thermometer of where the value is, and the price that you're being asked to pay is, you need to compare that to the spot price to see what kind of premium you're paying. The reason we've got a difference is just like anything. If you think about buying stocks, if you go and buy a stock or a group of stocks, you need to pay the broker a fee. So you might buy the stock at the price the stock is selling for, but you will have to pay a percentage or a fixed dollar amount as a fee to that broker. This is the same kind of thing with spot price, buy price and sell price. No matter who you're buying your precious metals from, whether it's a coin store on the main street, it's a online retailer, or it's any kind of business that's buying or selling on eBay or wherever it is, there's going to be a premium because that business has costs. There's wages to be paid for by the business, there's the transportation costs, there's storage costs, there's rent for warehousing and offices, etc. So there's all these costs that have to be built in, and the only way they can recoup those costs is by charging a premium when they sell the product to you. So that's your buy price, or when they buy it back from you, which is the sell price, because it's a bit opposite there because you're selling it, so that's that price. They will pay you less than the spot price, and the spread between the sell price and the buy price is the profit that the retailer is able to make to cover their costs. Okay, so I guess what you want to know though is, if I'm having to pay a premium, how can I maximize my value? Well, next slide we're going to get into that a bit more, but basically you want to maximize your value. That's why you want to shop around. You want to not take the first price you see. Look around, compare. The internet is a fantastic thing for this. Just any good coin store or precious metal dealer will have a website, and they should advertise their prices on that website. If their prices aren't fluctuating daily, that means they're possibly building in a lot more of a buffer, and your premium could be a lot higher, because gold prices, silver prices, all prices change every minute, but at least at a daily rate, so you want to make sure you're shopping around and checking on that. So does size matter? Oh, that could be a loaded question, couldn't it? Some people say no, but yes, it does. Okay, so what I'm talking about size here, I'm talking about the quantity of precious metals you're purchasing. So whether it's gold or silver, the smaller amount that you purchase, the more you're going to pay above spot price. It's just the facts, because you're dealing in small quantities. Silver, obviously, you are able to purchase a lot more for the same amount of money as you could gold, which means you have a lot better option of getting closer to the spot price with a smaller amount of money than you would trying to purchase gold. So that's a real big important thing to keep into consideration, and that's what I'm talking about here with economies of scale. So if you were to buy 1 ounce of gold, you're probably going to pay, let's say, 5% above spot price, for example. But let's say you buy 10 ounces of gold, you might only pay 2% above. Now, 3% doesn't sound like a huge margin, but when you're talking that spread across 3 ounces or 10 ounces of gold at the current price, let's say $1,350, so 1% is $13.50. So add that up over 3, you're looking across 10, you're looking at a couple of $100 difference if you have the ability to buy that amount. Now obviously silver, same thing. If you buy, say, 20 ounces is usually a smallest portion you can buy, which is around the $450 mark. Once you jump up to 100 ounces, that's typically where you start getting a discount per ounce, and it can be a couple of dollars. So you could save, say it's $1 on 100 ounces, you're going to save $100, which, when you look at it, is 3 ounces of silver that you've now been able to purchase with that savings. So what you want to do though is maximize your purchasing power. Now, what some people do and say when they are purchasing precious metals is they don't look at the price per se, they allocate a certain amount of money each month to purchasing precious metals. So let's say the $500 a month they want to put into precious metals, whether it's gold or silver, and no matter what the spot price is, some months they'll buy more, some months they'll buy less. That's a way of maximizing your purchasing power as well, not following the trends or the spot price so much, but just buying a set dollar amount each month. So this is what it's all about. If you've got not too much money to start with, you're going to be very susceptible to the spot price and buy-sell gap. But if you're not, if you shop around and you maximize your dollars, you can really start to earn or start to generate a good holding of precious metals. They estimate, or they they suggest that all your net wealth should have at least 5 to 10% of the net wealth tied up in precious metals as a protection. But if you've got a financial planner, have a chat to them. Hopefully I've been able to give you a bit of a layman's outline of why you're not paying what they say gold is worth. You might be paying a bit more, but that's life, and look, shop around. That's the most important thing. You don't walk into the first store and buy a new appliance without looking at prices. So it should be the same thing for your precious metals. Okay guys, that's it for now. Hope you found this interesting. If you do, please sign up for our newsletter. I've got a link below for that. You'll get lots more information about precious metals, the economy, and other things that you might find interesting. Okay, thanks for now and have a great day. Bye.